Welcome back. This morning, it was reported the U.S. economy is still resilient as retail sales beat expectations. This is reported from Reuters. In particular, they state retail sales increased 0.3% in November. We're going to show you the two top industries with the best retail sales. Interesting, they report retail sales on a month over month basis of 0.3%. That's retail trade and food services. Curious why they didn't mention the overall number, which is retail sales of 0.1%. This number is a little bit better, but it's a subsector of the entire report. Overall, we can see on a month over month basis, the biggest move to the downside are gasoline stations, the retail sales. Uh, Related to gasoline stations, also non store retailers. That was the best performing sector, up 1% on a month over month basis. On a year-over-year basis, the overall retail sales, now this is the average of all retail sales put together, is up 2.9%, which is better than we've seen in quite a long time. Really a good development overall. What we're going to see in a few moments, though, is that when you take into consideration inflation, the picture might not be that rosy. On a year over year basis, these are the different sectors, the subcomponents of the retail sales report. Non store retail sales, retailers up 10.6%. Electronics and appliances year over year up 12%. The biggest loser, gasoline stations down 9.4. These are the biggest movers year over year basis in retail sales. Non store retailers we think like online shopping, things of that nature, electronics and appliances, and the biggest loser again is gasoline stations. The reason why we mention that is because if we take a look at this on a year over year basis, we actually see some real breakouts over here. The white line, electronics and appliances, year over year is now the number one performing sector. It was. Very much caught in the middle of the overall range. And the light blue line over here, non store retailers, that's number two. The biggest loser this month's report on a year over year basis are gasoline stations. We had a little bit of a bounce back up and now going to the downside. So think of our own investments. If we have investments that directly benefit non store retailers, I think of online shopping, Amazon, things of that nature, electronics and appliances. We all know the list of those companies as well. Those seem to be doing the best. Now, retail sales in white over here versus Fed funds in blue. Clearly, we can see a period of very low interest rates in 2020, 2021 gave us very good retail sales on a year over year basis. Obviously, with higher interest rates, that has suppressed retail sales to some extent. It looks like it's coming back, though. It looks like we're fighting back against the high interest rates, and that is good. Retail sales. Now, again, this is the average across all the different components, 2.9%. It's the best number we've seen going back to late last year versus the S&P 500 in blue. There's a pretty loose correlation here. Retail sales improve. So do corporate earnings, which are reflected in stock prices in the S&P 500. Conversely, when one index goes down, the other goes down as well. So the strong stock market lately that we've seen does agree with a strong retail sales number. Now, take a look at retail sales on a year over year basis. That's in white. That's what we see here, up 2.9% on a year over year basis versus consumer price index year over year. This is our inflation rate. This is how much extra we're paying for everything when we go shopping, and that is reflected in retail sales. Well, the question is retail sales really improving, or is it just that the companies are making more money because the prices are higher for all the goods in the stores? Well, what we can do, first off, take a look again, retail sales, and this is the average across all the different subcomponents, 2.9%. That's the best number we've seen. Now, take retail sales, that's in yellow, 2.9%, and then subtract out the current CPI, which we just had the other day. That's around 3%, a little bit above 3%. And what we can see is that the actual retail sales, if you take out the inflation rates, is actually negative zero point 0.3. And in prior months, we can see this was actually quite negative. So As good as retail sales look, and it is showing an improvement, you take away the inflation rate, I would say that the number is probably really not that great. If we were to report, yes, retail sales on a year-over-year basis down 0.3%, we'd say, okay, well, not great, not horrible, not so much. But if you look on Reuters, they'll say, hey, beats expectations, the economy is firing on all eight cylinders. Not necessarily the case when you take into consideration the inflation rates. And I think it's important to mention that because, we see some of these numbers that are released and the numbers, wow, the economy looks so good according to the numbers. But why does it not feel that way for the average consumer spending all of this extra inflationary money in the stores? Well, maybe this is a reason why. And if this is something that you find interesting, please let us know. We're going to continue, or we'll start to incorporate the inflation rate within some of these numbers so we can see maybe the true number behind the inflation. We hope this has been helpful. We look forward to seeing you back soon.